Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my great friend Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Welcome back, sir.
Hello, Ivan. It's good to be back. Thanks for having me back.
Yeah, it's always great having you on. You know, the crazy stuff that's going on in the world is sending these gold prices higher. I wanted to get you on to talk about everything that's happening. What are you seeing in the precious metals market? Everyone this past week has been keeping a really close eye on gold, making new all-time highs. What are you seeing there, and what's happening in precious
It,
metals?
it's very simple. There's only one major commodity on the planet that's making new highs, and that's gold. And I expect that to continue.
Right.
Everything else is just falling by the wayside, particularly in the metals. By the time this hits the tape, I'll publish my metals outlook, and I just point out compared to gold, most metals are melting, and they have been. So copper's bumped up recently to around $4 a pound. I think that's potentially going to be a responsive sale by the end
Right.
of the year. We might look back at that as near the high. Um, and crude oil's also bounced a little bit. The most economic sensitive commodities, but overall, it's only gold that's really doing well. So the way I look at the rest of the commodities are in ranges and are bouncing up near the upper end. Gold's in a bull market.
Now, where does this stop? Gold, central banks are buying gold at new record pace now. They're stacking up gold. But where does this go? Like you're looking into April, May, June, July in 2024. Do you think really it could hit a level where, people will just look at the whole market and say, okay, we're done with the AI boom, we're done with all this, and then start flooding money into gold? Or is it still just, they're still rallying with AI and then kind of on the side stacking their gold? What do you see there?
Well, it's probably should be considered disconcerting at this point that I'm typing. I'm going to get the performance of SPY versus GLD versus
Hmm.
since the end of 2020. The gold's actually beating SPY, even though
Wow.
it's about difference about 5%. SPY since the beginning at the end of 2021, before the significant tightening. SPY's up maybe 10, 12%, and gold's up almost 20%, or GLD, total return.
Right.
So that's a problem. I mean, if all this exciting about AI and this stupid rock that you take out of the ground, put bat in the ground is beating, there's an indication there. So I think the way I look at it is I like to keep these kind of things simple and macro and go back to what Jesse Livermore said, the famous speculator from the 20s and 30s. And that is that markets always do what they should. It's a matter of time. So I think gold is on a trajectory to go to 3,000. I think
Wow.
2,000 is key support. I don't know when. I think a key catalyst that will make that happen is when at some point investors say, okay, the U.S. stock market's overvalued and it's going to underperform for a while. At some point that'll happen. And at the same time, they see that they're not getting 5% in U.S. T-bills. That's going to happen. It's a question of when. And one thing that's significant to flip will be when that'll partly flip ETF outflows back to inflows. That's been significant. Gold ETFs have been the total ounces have been dropping for almost 2 years now. I've never seen that
Wow.
with market making new highs. So that's the difference. And the reason is there's a good reason for gold to continue performance. We cannot underestimate the shift in the world order due to the unlimited friendship from President Xi and Putin.
Right.
China is one of the biggest gold buyers on the planet, not just Chinese central bank, but also citizens. They have no place else to go, realistically. And we have these wars raging, continuing. There's a bit of a de-dollarization going on. But the key thing also remember is I still like to say, you just can't, I know people are sick of hearing it, from just can't hold gold without some Bitcoin in that space, because Bitcoin is doing a little bit of demonetization of gold, not as much as gold did to silver, but there is those inklings heading that way.
And why do you think that there's like a divergence? So many people in the silver community were just watching gold go higher, but even the gold miners and the silver miners and the silver actual, the price of silver is not catching up to where we would want it to be higher. Is it just late to the game, or what's the divergence there?
I'm concerned that the gold rally will accelerate versus everything else. To me, that's we'll see what happens with Bitcoin too.
Right.
But what you mentioned first of all, that was the key theme at the Monies and the Metals and Money conference a couple weeks ago in Miami, the panel I moderated. And the key thing I'm concerned about is when gold equities, underlying metals equities, underperform the metal in a very strong record-setting beta environment for the
Right.
stock market. That's a problem because when we do have beta. back and fill the stock market. I didn't say if.
Yeah,
What does that mean? I think that means the metal should continue to accelerate. So one thing that was pointed out a fact is silver is no longer precious metals. It is becoming more of an industrial, less of a precious on a daily basis. Platinum and palladium got too expensive. We saw that. Certainly palladium, and it's just come back to some decent levels. Now they're all
right.
kind of being lifted, but the thing is, gold's pulling up everything. And you want to be with the winner, or you want to be the ones dragged higher? Now, typically, silver has a 1.6 beta to gold on average, and usually call it leverage gold, but not in an environment like this when the rest of the world is tilting towards recession. I'll give you a good indication of that. If you just look at U.S. 10-year note yields, right now we're talking there four handles. Virtually every other country, major country in the world, in Europe, mostly are 2 or 3 handles. China's a 2 handle. Japan doesn't
Right.
even have a handle. There you go. The rest of the world is still tilting towards recession, and 10-year bond yields are showing you that
Right.
in the rest. So to me, that's a tilt for industrial metals and silver, and it's a bullish case for gold.
And you were looking at the oil markets too. There was one CEO of a Middle Eastern oil company I seen last week. They were explaining that because of the war that's happening there, and a lot of the oil containers are just being taken out, so they're taking longer routes, and it's costing them a lot more. So, do you think that longer route? And he even said in the next 12 months, if this continues, there's not going to be any oil tankers going through that strait. They're all just going to have to divert around the longest way, and it's just going to cost way more money for everyone. Inflation will be higher. Do you think oil prices will be higher? What do you see there, Mike, with the geopolitical tensions with oil?
So I'll be publishing in a day or two. I think crude WTI is more likely to go to 50 than 100. I've been
Oh,
early.
really?
I've been wrong. I'm willing to put fill or kill on that this year. I think it's going to happen suddenly. It's been gradually. If it catches up to natural gas, it's going to 40. If it catches up to corn, it's going to 50. If it catches up to its break-even costs in this country, it's around 55. So
Wow.
it's got a decent geopolitical bid in there. And the transportation only makes a difference for the underlying price of crude oil if it reduces supply. That's not reducing supply. In fact, it's affecting demand. It's
Right.
actually increasing prices for the end user. So maybe at the pump, refined crude, i.e. gasoline, diesel is going up, and most notably in Europe. But the WTI contracts priced in the US, the US and Canada are massive net exporters, around 6 million barrels a day if you include liquid fuels.
Yeah.
That's the highest ever. And just to let you know, that has been a trajectory I pointed out for years. That's part of the reason crude oil is down. And that is about equivalent to actually OPEC spare capacity, because they've had to cut back capacity because the US and Canada are taking out so much, is around 7 million barrels a day. That's well above its average, around 4 or 5. So the bent there for crude oil is very bad in my view. And we're near the upper range in my view. And key trigger might be the US stock market just having a little back and fill. But the fundamentals to me are quite bearish for crude oil. And also you look at the world's most significant importer, China is completely dependent on fiscal and monetary stimulus just for buoyancy at the moment. Now look at
Yeah.
Germany. Germany is clearly in recession, partly because a big portion of GDP is exporting to China. You see the tilt there? The whole world is tilting towards recession. If we get a little spike in crude oil because of geopolitical events, yes, that makes it tilt worse, not worse. And that to me is why to offset this oversupply situation, most
Right.
notably in the benchmark, you need lower prices. Typically, it's the way it works. Like I said, it's happening in gas, it's happening in corn, and it's now. I'll end with this. Most commodities, with the exception of gold, are now probing for their break-even costs, and I think the only one that's really there is natural gas.
Yeah, it's really exciting to see what's happening in the markets now, especially with everything that's going on in the world. And it's such a huge pleasure having you come down to Wall Street Silver, Mike. Before you go, I'd like to ask you quickly about the Fed. Do you think the Fed they're gonna delay a rate cut till before the elections or after the elections? Do you think that's when they'll have to come in and save the market? Is it they're just delaying it politically, or what do you see the Fed doing?
My sense is Chairman Powell wants to cut, but he needs a good catalyst to do it.
Ah,
Inflation above his target is not good, and the massive speculative frenzy in the equity markets and in cryptos which he somewhat spiked or inspired a little bit by tilting towards easing too soon,
Right.
are things reasons not to be easing anytime soon. All he needs is a little trigger. Maybe a stock market drop in normal 10%. You know, the old days we used to have corrections. That last one was in October. That's
Yeah.
what I'm concerned about. And then he'll tilt over to the macro big factors are very global deflationary recession. Look at the bottoming unemployment in the US from the lowest level in about 50 years, just starting to tick higher, up about 0.5%. And CPI is now well below the unemployment rate. That conversion, the last time we had that was 1977, right before
Wow.
significant recession. And my tilt from commodities is everything to sowing. That's why I'm kind of think we're up the upper end of the range, and that's why I think gold is going to benefit. So here's a domino. If the U.S. stock market just has a normal 10% correction, that's a deflationary domino kicking in everywhere, and that's a reason for the Fed to start easing. But then they'll just be catching up
Yeah.
to, I think, pretty significant forces.
Yeah. Well, Mike, it's such a huge pleasure having you come down to Wall Street. So where can people connect with you? Where can they read your newsletters?
Thank you. I'm on LinkedIn, Mike McGlone, Bloomberg Intelligence, and at Mike McGlone 11 on X.
Oh, so they can get your newsletters from there, either Twitter or the LinkedIn.
Yeah, so my
Okay,
network, they can if they reach out and ask, I can add them to my distribution list. I would just need an email.
okay, cool, awesome. I'll put the links in the description below for everyone. And thank you again, Mike, for coming down to Wall Street Silver. And thank you everyone for watching.
Thank you.